Hello everyone, today we are going to present our TP finding and our object is WeWork. For starter, it's about development background. In 2010, WeWork was established in the Soho neighborhood of Manhattan for the first WeWork location. And after 4 years of rapid expansion, WeWork is valued at 4.6 billion, with investors such as Goldman Sachs, JP Morgan Chase, and so on. In 2017, WeWork's valuation swells to 20 billion as SoftBank makes its first 4.4 billion funding move. In 2019, WeWork filed for IPO, but market questions its losses and corporate governance conditions. In the same month, WeWork agrees to a 9.5 billion financial support program from SoftBank in exchange for 80% stake. In September, WeWork's parent company, the We Company, decided to delay company IPO program. And in March 2021, the We Company announces share listing in merger with BowX Acquisition Corp. And in October, WeWork was listed on the American Stock Exchange. However, they filed for bankruptcy protection in November 2023. So whether they can make a comeback or make profits depends on how they handle with their debts and reorganization. So we mentioned bankruptcy. We were applying for Chapter 11, and there are some difference between Chapter 7 and 11. Both of them are considered bankruptcy and are options in the US to settle liabilities. However, the difference is that the Chapter 11 is about to reorganize debts and the business can re-emerge as a healthy business. And in terms of bankruptcy, scandal about the CEO might slightly affect this result. In 2016 and 17, the company paid 12 million US to the senior manager for buildings which owned by the CEO. In 2018, WeWork purchased a 60 million jet, which was rumored as Newman's vehicle. In 2019, WeWork paid 5.9 million to license the trademark to Newman just because its ownership belongs to the CEO.
Hi, I am Becky. For this part, I would mention the WeWork bankruptcy. This table, which is from the WeWork Chapter 11 filling, shows its estimated assets and liabilities. Its liabilities are between $10 and $15 billion. Now, the biggest highlight in this filling is that WeWork is requesting the ability to reject the leases of certain locations. The members who are involved already have received advance notice. Next part, I analyzed its financial statements to further understand the current financial situation of WeWork. I divided it into three aspects: its financial structure, its pecuniary operating ability and profitability. In terms of its operating ability, I used debt ratio as an approach. The debt ratio is an indicator to measure the level and risk of an enterprise, so the operation status of a part of the company can be known from the calculation of the debt ratio. In general, the appropriate level of a company's debt ratio in a normal industry is about 40-60. The table shows that the debt burden ratio of WeWork is over 100, and it had risen from 2022 to 23. On this side, we can see that the loss from the operation is increasing from 2022 to 2023. Both of them show the operating performance is not well. Regarding pecuniary ability, the current ratio is an important financial metric used to assess a company's short-term liquidity and its ability to cover immediate liabilities with its current assets. In general, the appropriate level of a company's debt ratio in a normal industry is over 100. However, WeWork only has 34 this year. Similarly, its cash and cash equivalents this year are only 205 million. It's highly risky for WeWork that its short-run solvency is weakened by having not enough additional cash and cash equivalents, so WeWork finds it difficult to meet short-term obligations. And from its profitability, I use net loss to evaluate this company's operating results in a specific period. WeWork seems to screw up, and it has more seriously suffered the loss of current and long-term lease obligations. First margin is also a key financial metric because it's the first step in understanding the potential value of a company's business model and how sustainable it will be. In the case of WeWork, there's no cost of goods in the financial statements, so we regard the location operating expenses in the financial statement as the direct cost. In conclusion, from a comprehensive analysis of WeWork's financial report across three critical dimensions: pecuniary ability, operating ability, and profitability, it becomes evident that the company lacks a healthy balance sheet. This deficiency in financial strength might be a primary contributing factor leading to the company's decision to file for bankruptcy. In our assessment, several pivotal factors contributed significantly to the downfall of WeWork. First is an unhealthy balance sheet. Besides, it wasn't perceived as having a promising future in the past. Back in 2019, the company, which had been valued at $47 billion in a round spearheaded by SoftBank, attempted but unfortunately fell short in its endeavor to go public 5 years prior. During the COVID-19 pandemic, remote working became a normal situation. Before the pandemic, just 3.4% of Americans worked from home. But at the peak of the shutdown, an Upwork report in partnership with MIT found that nearly half of the US workforce was working remote. This can well place a significant proportion of WeWork at serious threat. Afterward, WeWork had a high investment in long-term lease obligations, which leases millions of square feet of office space in 707 locations around the world. WeWork must bear a bigger financial burden when it comes to starting its rapid expansion.
Before WeWork bankruptcy, what did the landscape of its game look like? We can use a product analysis to help us understand this. The value net shows the four type player in WeWork game. WeWork had two main type supplier, those providing funding, and those provide real estate. WeWork customer, ranging from freelancer and startup to big company like Adidas or Facebook. Investors who believe in WeWork future will also consider customer, and seen in the 4.4 billion investment from SoftBank in 2017. In the co-working space industry, WeWork's biggest competitor is the IWG Group, which owns multiple share of its brand, including Regus and Space. In the United States, there are also competitors like Knotel and Premier Workspace. It's noteworthy that WeWork real estate suppliers are also potential competitors, as they can operate share office business independently or join other brands. WeWork complementary, the player who can help WeWork become more attractive are their customer. Investor will attract other investor, user will attract other user. And a real estate broker is also WeWork complementer. Real estate broker bring property owner and user in WeWork, and we will pay them a commission as a reward. For customer, we will offer flexible lease and community building. For supplier, we will entering an area increasing property value, sometimes by 50% to 100%. Former CEO Newman positioned WeWork as a tech company, avoiding direct competition. However, when the fog lifted, WeWork business model faced challenges against competitor. WeWork initially tried to expand scope into housing and education, but that ended due to poor management. Now it's mainly focused on co-working office space, with 650 locations globally.
I'm Dora. Next, I will introduce to you the business model. The first key partner of WeWork is investor. In addition to provide the funds needed for a company operation, the previous session also mentioned that investor will bring more investor confidence. This is the network effect brought by the investors. Real estate company and the landlord. Two of them offered WeWork housings, third-party suppliers and service provider. They provide products that WeWork needs, such as clean services or technology, etc. For example, WeWork's third-party suppliers, Factuals, provide data of different locations based on the information such as coffee shop, number of restaurants, bars, etc., which allowed WeWork to quickly select the most suitable location. Next, the last key partner is an alliance company. WeWork alliance company include I Love Coffee, Guanghua School of Management in Beijing University. Let's move on to the key activity. The activity of WeWork are building network effects. WeWork has its own blog called WeWork Ideas, which contains articles on multiple topics. This practical article can be shared on various platforms to bring traffic to WeWork. In addition, WeWork also designed the user-to-user recommendation program, which provides some discount to users who recommend WeWork to their friends. In addition, they also organize physical activity such as music and networking conference to promote users to participate in interaction and create more multiple values. In addition to the above-mentioned action, let's directly promote network effect. WeWork also indirectly promotes network effect by increasing cooperative enterprise and strive for benefits for members. Other key activities of WeWork also include real estate development and property management. Let's move on to the key resources. WeWork's key resources include employees, recommended network effect, housings, virtual assets, each community ecosystem, and funds. Recommended network refers to connects with broker and customers mentioned earlier. Virtual assets include WeWork's exclusive application and network services. Each community ecosystem, WeWork Shared Spaces is the community ecosystem, which facilitates new value creating. Let's move on to the value proposition. Value proposition of WeWork contains flexible shared workspace, Flexible pricing model provide equal facilities and service to create vibrant work environments and creates community value through physical interaction. Let's move on to the customer relationship. Company and the customers can get in touch through consumer hotline and official websites. In addition, WeWork also forward WeWork ideas article on social media, such as Facebook, to maintain contact with customers. Let's move on to the channel. Channel contains awareness, evaluation, purchase, delivery, and after sale. The channels of WeWork include social media, official websites, and customer services phone number. Let's move on to the customer segments. In the beginning, WeWork targets a niche market. That is, their customers are people with special needs, such as startup. Later, it gradually transformed into diversified market. Their customer contains company and individuals. In addition to startup, there are also mature companies. Let's move to the cost structure. Cost of WeWork contains acquisition. WeWork acquiring companies include their suppliers and their competitors. And next, rental cost. And their cost also contains salary, IT infrastructure, like applications and the platform of WeWork. And the last, general administrative taxes. Let's move on to our revenue streams. WeWork's main revenue comes from membership fixed fee and the rent, but a small amount of comes from additional service charges, such as using WeWork's service based just as a temporary company mailed addressed. This is my part. Thank you.
As we've understood through the WeWork strategy, we can see that one distinctive thing has been continuing to appear. WeWork has a strong emphasis on community interactions. The vision, empowering tomorrow's world at work, illustrates the ideas about WeWork's value, that is, to create a workspace with flexibility, community, and innovation by offering flexible arrangements and environments that promote innovations and sharing ideas. So how does WeWork physically do it to create interactions? WeWork fosters value interactions by offering its members in various aspects. For global workspace, they provide members with workspaces all around the world. WeWork fosters value interactions by offering its members the ability to work in physical office spaces across the world. For business service connections, it establishes connections between members and business service providers, enabling them to have access to various services such as healthcare and human resources solutions. The added value into business services also connects members with business service partners. And that is about social activities. WeWork actively encourages social engagement by organizing social activities such as seminars, startup gatherings, and business events. These actions aim to create a strong community, allowing members to expand their networks. However, as we look into WeWork's commitment to community interactions and the results of the network effect, does it truly qualify as a platform? This uncertainty stems from two key observations. Firstly, there is the presence of the indirect network effect. The interactions seem more like a match between their business partners and memberships, rather than the direct interactions between suppliers and vendors in a typical platform model. In addition, the control of the office space sources isn't an open environment for landlords. WeWork control those real estates by renting them out under its name without opening them up to other space providers. So, in a more precise sense, WeWork lacks the typical factors of a traditional platform business model, which could not be confirmed by the traits of a platform theory.
For conclusion, the reasons why WeWork went bankrupt is because the poor operating model and financial health amidst huge debts and losses, which is because the rapid expansion that cannot catch up with the profitability. And as the co-working space industry continues to grow, the chance for the WeWork to escape closure and continue to operate is still possible. And here's our advices. By adjusting business model and by promoting network effects. By adjusting business model, we could operate a franchise model and renegotiate lease prices or shift the market positioning. And by promoting network effects, we could track and maintain the complementary relationships or enhance the experience for non-members. And for a relationship is complementary. They can provide industry-related services or turn the ecosystem into a business facilitating matchmaking. So this is the end of our presentation. Thank you for listening.